Hello everyone and welcome back to another market review. This is Silent. We are looking at the NASDAQ December contract for 2025. Starting off with the weekly chart. I've drawn your attention to previous week consummate encroachment, and we've delivered through that after the open of the week so far and have rallied onto a new high for the week and putting in a strong delivery to the upside so far. Let's go ahead and drop down into the daily chart and go over some of those levels that we've been looking at. Ignore this candle because I took the screenshot after 6 o'clock. This day is our focus, so you should ignore this one. If you remember from last week, I brought your attention to this daily buy-side imbalance, and we dropped down into that on Friday and then closed above the upper quadrant of this range and then gapped above on the open this week and actually opened above that daily buy-side imbalance high and left a blunt-ended low on the open of that candle, and we reclaimed that daily rejection block level and pushed strongly throughout the rest of the day and put in a new high before pulling off of that high and settling inside of the previous day's range. Let's take a look at the 4-hour chart. Again, we should ignore this candle because this is the 6 o'clock open. If you remember, we were watching that daily buy-side imbalance, and that's because we rallied from this 4-hour buy-side imbalance here, and all of this up range from this delivery until we get to here is a daily fair value gap in the form of a buy-side imbalance. We dropped down into that range on Friday and overlapped that 4-hour buy-side imbalance, and we gapped up on the open of the week and respected the midpoint of that 4-hour level and the low of our daily rejection block, and we rally pretty much all day and then close in on the highs. We take out that liquidity and then pull back into the daily range. I'm paying attention to this 4-hour wick for tomorrow. If we can respect that range, I would be expecting for price to rally for another high. So I'm not standing in the way of this being a bullish, all-time high, continuously seeking all-time high rally. On the hourly chart, you can take a look at the last couple of days of the previous week's delivery, specifically that hourly sell-side imbalance. We traded through it and then dropped down and then used as a premium array and then reaccumulated inside of our daily level. We see our new week opening gap here. That's that gap. We trade up in the overnight and then almost completely fill in that sell-side imbalance there. And then as we go into London, we drop down into this fair value gap here and do a turning point, and we begin rallying. We put in a high before lunchtime, and then we get a retracement during the lunch, and then we push stronger to end the day in throughout the afternoon session, and then finally right on the close we begin to pull back. On the 15-minute time frame, I left Friday's range and today's range in the focus, and I wanted to bring your attention to this Friday sell-side imbalance here. After we opened on Friday and then did this consolidation, we left relative equal highs here and dropped down into our higher time frame level, and then this is where the reversal occurs, especially with that gap up on the new week open. We trade through this high, and then as we enter this sell-side imbalance, price has an unwillingness to drop from it. So instead we consolidate in this range and begin accumulating bullish ideas. We begin seeing how price is respecting this range, and every time it drops down into a low, it begins to rally. See that there? And then so after this happens, we can see how you would want to be a buyer during this down close range or any of these ranges following it. Being a buyer in that proportion of this range is the best entry for this stage of a rally besides getting the turtle soup. We see that down close range here and respect of the constant encroachment of the Friday's sell sign imbalance. Now I'm just dragging this one over here because there's no other obvious ones in that price action from Friday. The only one that made sense to bring over and look at for today's action would be this one. So we rally up, attempt to make a high before the pre-market. Just on the open, we rally up and create a new all-time highs and take out Friday's high, and then break back down into Friday's new day opening gap, the hourly SIBI, and just miss the high of that Friday SIBI, and then don't really do anything too spectacular going into the end of the day. It was just really a grindy move up into another purge on liquidity to end the day, and then it pulls back again. On the 5-minute chart for Monday, we can see how price consolidated and then drops under this sell-side liquidity from midnight during the London time period, and then reaccumulate on top of that Friday SIBI a little bit better on the 5-minute chart. We rally, and then finally, after we break through the high of that SIBI, we come back down and test it before rallying and breaking Friday's high with some strength. We can utilize this imbalance here and this imbalance here as an inversion array after price delivers through the low of it and closes below. And we can see that there's a failure to launch entry here. Price should have rallied with strength on this open after putting in this down close candle. If it was going to put in a new high at this moment, we would have seen the delivery higher there, but it fails. So trading back up into this up close candle here, we can be a seller and attack these relative equal lows and go into Friday's new day opening gap. And then going into the lunchtime period, we do a reversal and begin traveling higher and put in one more all-time high to end the day before getting a nice sell-off going back into lunch sell-side liquidity. And all of this is extra because it's after the close, so this is all Asia price action here. On the 1-minute chart, I just wanted to show the reaction from that higher time frame level during the open of 9:30 and the initial respect of the first presentation fair value gap. We're able to utilize this as a selling opportunity, and then seeing price reverse down here with this break above with the imbalance and reaccumulation here. As price delivers back into the first presentation fair value gap, we're going to be utilizing this as a discount array and can accumulate longs. So every time it taps down to here, price is accumulating longs before rallying and taking out a new high. We reaccumulate here again, and then as we break the high, we leave the first presentation fair value gap for the PM session. We accumulate a little bit inside that range, put in a new high, and then pull back and close the day within that price range there. Alright, so that's going to be it for me today. Hopefully you learned something. If you found anything insightful, please let me know in the comments. And don't forget to give a like and a subscribe. I'll see you all tomorrow.